down in Dallas. I've actually been down there, been to the ranch. You've got a lot of distress down there right now, what's happening in the energy world. I gotta believe you see some opportunity in what's happening.
I think there is a massive opportunity in energy,
Yeah.
and my views are dogmatic about the supply and demand situation in energy, and that's cost me this year. I know this
So
has been
what-
one of our worst years in the last 10.
Okay, so let's talk about the dogma of your views. What are your views?
In energy, I just believe that, first of all, the margin of safety for the globe is the smallest it's ever been in energy. So global demand's like 96 million barrels a day,
Right.
the highest it's ever been. And let's say incremental supply capacity, let's say swing capacity, is at the lowest point as a percentage of that, about 1.5 million barrels a day.
But that's because prices have come down, so the marginal producer has come off market?
No, it's I mean the margin. There are very few marginal producers that have come off the market. U.S. production at its peak was 9.6, and today it's 9.2. Only 400,000 barrels a day has been shaved off U.S. production. OPEC production is continuing to move higher.
Right.
It's 32 million barrels a day.
And
So
that's in order to help them protect their market share?
it is all of OPEC, I think, trying
but
to
if you
put
think-
marginal
But
producers
if you
here out of
think,
business.
if you've got a scenario where the global economy is going to slow down
A little bit.
a little bit, isn't that the direct correlation with the energy assets?
So, look, global GDP will still be positive. It's not going to be 4%. It's not going to be 3.5%. It might only be 2%, which when you look at scale, right, that's a huge number.
It's $1.4 trillion.
It's a massive amount of money, but it's still growth. Incrementally, there's new demand for crude every year, depending upon what global GDP is and demand response. Point being, right now I think we have a glut of maybe 600, 700,000 barrels a day. You have to realize that the U.S. added 1 million barrels a day 5 years in a row, but it took $100 crude for us to do that. We were the marginal swing producer for the world, and now we're going to go down 1 million barrels a day, I think, in the next 12 months. So we're going to go from a glut to all of a sudden a deficit, and the world's not ready for a deficit. So I think a year or two from now.
If I'm a true long-term investor,
Yeah.
is this the best place I should be thinking about allocating capital right now?
Yeah, if you're going to allocate capital for the next 3 to 5 years, you should do it now.
Into the energy space?
Yeah, call it in the next 6 months, that's when you buy it.
And is it infrastructure, pipelines, is it producers, upstream, downstream, where?
It just depends where you have expertise. Those businesses are dominated by those that have expertise in each of those verticals, and you better get with those people to decide where in the cap structure to invest, because these MLPs, you know, the upstream MLPs, their equities trade for pennies. Their subordinated debt trades in the 20s and 30s, and their senior debt trades in the 80s. No one knows when they file bankruptcy, which many of them will, what are the best securities to own, because the equity is probably going to get wiped out. The subordinated debt might get wiped out.
Well, just final point on this.
So I'm saying it's a really difficult answer to tell a crowd like this.
Understood. We're
where
not,
to go.
you know, we're not trying to pick specific stocks, but
Yeah.
just put.
But you have a
reference-
contrarian near-term view on energy.
You
And a
referenced
long-term view.
you referenced the housing recovery post 2009.
Yeah.
Would you describe the rebound in energy when it happens? Is it going to be a similar type of rebound?
It will be. There aren't many instruments that are available in the energy market
Yeah,
that
the
were
housing
available in
market
the
was
housing
way
market.
more liquid than
Yeah.
the energy market. It was an easier way to make that investment.
Well, you know, you used to always talk about hard assets. Maybe the best thing to do is go out and buy a couple of rigs that are just sitting there and probably trading way below book value.
Or for this crowd that we're talking to, all you do is go buy a crude oil ETF.
Right.
Because that way you don't have to bet on a specific management company. You don't have to worry about a cap structure.
Just bet on the
You
commodity.
just bet on
Supply,
supply and
demand,
demand.
balance.
Yep.
And if you can hang on to that for 18 months, 2 years, I think you're going to do really well.